It's not about how much money you make. It's about how much of it you actually get to keep. I think as business owners, all of us, myself included, we work a lot all the time, and we're always looking at how do we make money. But it's also important to understand how much of it we actually get to keep.
I had a tax bill that year. They did my taxes and they're like, oh, you owe $17,000 or $14,000. But this CPA said, hey, listen, you're set up right now as just an LLC. If we turn you into an S-Corp just for tax purposes, this is what this could look like. And she did the math. We became an S-Corp, and I think I got paid like $3,000 or $4,000 instead of having to pay that $17,000 or whatever it was.
Make sure that you have a system that works for you. It doesn't matter what I like, it matters what you like, because you're the one that's actually using it. I think really take some time to identify like what method works for me. If you're a solopreneur, you're still doing your own bookkeeping, it could be as simple as Excel. If you have the budget, that's definitely something really good to outsource or offload from your plate, whether it's somebody local who can do it, or even someone offshore who can at least do the data entries for you. Because I think once we have a systematized and things are being tracked, it really takes a lot of the stress out of tax time,
On episode 406 of the podcast, we talk about the magic of S-Corps and how they can slash your tax bill. I mean, that sounds amazing. We also talk about smart write-offs that you might be missing out on, why real estate could be your secret weapon for building wealth, and how to find a kick-butt CPA who will have your back. What's up, my friend? Hey, it's Ryan Coral from the Grow Your Video Business Show. I am so happy that you're here. This is a great episode with my new friend, Amanda. Super smart, and you're gonna learn lots of stuff. Whenever we talk about finances and CPAs and whatever, it is not a sexy topic, but guess what? If you want to run a business and have it not stress the crud out of you, you have to get a hold of your finances. And what better time than right now? So hopefully you'll walk away. Certainly you will walk away with some great tips and tricks and all of that stuff. So I appreciate you, and I'm grateful that you are taking time to invest in yourself. That is so good, to work on your business and not just in your business. So welcome. If this is your first time here, it is awesome to have you. We've been doing this show for a minute, and I've been running my own video production business for a minute, or what's 20 years in minutes? It's a lot. It's like that one song, 6,500 minutes. Okay. I'll save the singing for later. Anyway, today we work with a lot of different companies, mostly small businesses, small and medium-sized businesses. We've worked with big, iconic brands over the course of 20 years, but the majority of our work comes from small, medium-sized businesses. We do a lot of brand films that range $10,000, $20,000, $30,000, and we've done a lot of projects that are a lot more than that. And we've got some new offerings that we do at our studio in Metro Detroit that start at like $2,500. So we have been doing this work, and like so many people, the pandemic really changed a lot of things in our business. And anyway, this show is really a platform for me to share the things that have worked for me, the things that haven't, and then for me to be able to bring on incredible people like Amanda today to help you in the different areas that it takes to grow a video business. So kudos to you for taking some time out to hang out with us today. If you're in a spot where you're like, man, I would love to have a little bit more direction, I would love to have some clarity on what my goals are and what I should be going after, and everything has changed in my business, or I just started my business. If that sounds like you, then I want to invite you to check out the 10X Filmmaker community. I've got a free resource, a new workshop that I'm launching. Maybe it's launched by the time that this episode is airing. And The 10X community is something that I've been doing for the past couple of years, and I offer monthly coaching. There are monthly master classes that come out. There's homework and accountability and in a sense of community. So if that sounds like something that you might be interested in, and you're interested in the workshop, the new workshop that I'm offering, you can go to studiosherpas.com/10x filmmaker. It's the number 10, 10x filmmaker, and you can learn more about that there and get access to the free workshop. So that is my gift to you for being here, and that's all I have to say about that. So actually, I think as you're listening to this episode, you're probably not with us. The Onward Summit is happening right this moment. So I think, if I'm looking at the dates correctly, when this episode goes live. So anyway, not to give you FOMO, but that's happening. Okay, let's jump into the episode and roll the tape, cue the things, and all the things. Okay, so here we go. What's up, friends? Hey, today I'm very excited for this episode. I'm excited for all the episodes, but today with me is Amanda Hahn, who is a CPA and tax strategist at Keystone CPA. So today we get to talk about the super sexy topic of money and taxes and saving you money and making you more and all of the things. So Amanda, you've got quite the job, the task at hand, but hey, welcome to the show. I'm super happy to have you.
Yeah, thank you so much for having me. I'm really excited to be here. And I understand tax is like a very dry and maybe scary topic. So I'm looking forward to maybe changing how our audience feels about taxes.
That's good. That's good, because I just remember the first, probably, I won't say 10 years, but almost the first 10 years of running a business, I was scared of it. It would make my heart race, and I just did not like it. And it's mostly because of ignorance, right? That you just don't know what you don't know. And I just heard so many horror stories. What could you, if we were to make a title for this episode, or just say like, listen, if you can get a handle on this right now, no matter what stage you're at in your business, if you can get a handle on your money in your tax situation, I've seen clients, experience chaos before and peace once they kind of get some stuff figured out. But the longer you go without addressing things or having a professional in your corner, how can you entice us to lean in and say like, oh, this actually is a topic worth knowing more about?
Yeah, I mean, I don't know if we have a lot of Robert Kiyosaki fans. He is the author of Rich Dad
Oh, yeah.
Poor Dad.
Yep.
And one of my favorite quotes of all time is, "It's not about how much money you make; it's about how much of it you actually get to keep." Right. And so,
Yeah.
I think as business owners, all of us, myself included, we work a lot all the time, and we're always looking at how do we make money. But it's also important to understand how much of it we actually get to keep. Because tax rates have gone up historically. And so for people who are in higher tax brackets, depending on also what state you live in, we could be losing, close to or even over 50% in taxes, just in income taxes, where everyone here who's self-employed, we also pay into like Social Security and Medicare. So you add those, kind of baseline things, we're like well over 60%. But I think, you were mentioning like it, when you're first starting out, taxes is scary. And that's really what I see with most people I meet. I think it's just kind of the narrative we're taught, right? Through media, maybe our parents, like taxes are really bad. There's nothing we can do about it. We just have to pay it. But that doesn't always have to be the case, especially if you're a business owner.
Well, so the where things started to shift for me, where I started realizing like, oh, okay, maybe there's something to this, is, I don't know, 4 or 5 years into running this business, I had a tax bill. And, it's because I didn't have a CPA. I think we were trying to, I don't know what I was doing back then, filing taxes, whatever. But I finally went to somebody who recommended, like, hey, this is the person that I use. You should go visit them. So I visited them, went through all the stuff. That year, they did my taxes and they're like, oh, you owe $17,000 or $14,000 or something. Just, it was back then, I mean, today that's a lot of money, but back then, like this is almost 20 years ago. This is like, holy cow, that's so much money. How am I ever going to pay that back? I'm going to jail. Like they're shutting the business down. I don't know what's going to happen. This is not good. But this CPA said, hey, listen, you're set up right now as just an LLC. If we turn you into an S-Corp just for tax purposes, this is what this could look like. And she did the math. We became an S-Corp, and I think I got paid like $3,000 or $4,000, like came to me that year instead of having to pay that $17,000 or whatever it was. So that was a moment for me where I said, oh my gosh, there is something to this, like knowing or having the right person in your corner that can say, hey, based on what you're doing, based on your goals, what you want, there are some things that we can come in here and help you save money, not necessarily make more money, but if you can keep more of the money that you're making, like, holy cow, that could be a lot of money. So thank you, because I assume that's part of the work that you do.
Yeah, I mean, saving more money really is the same as making more money, right? We actually tell people like, hey, when you save in taxes, that's the easiest money you can make because it was already your money to begin. We don't have to work more hours to save on taxes, right?
Right. Yeah. Yeah, that's good. So what's a good place for most people? You know, I'm certain that you work with a lot of people that are in a very similar situation. So where should somebody get started? Because I think that's probably the hardest part. It's like, I got receipts everywhere. I don't keep track of things. I don't know who to trust with my money. How much is it going to cost me? You know, all of those things where, you know, I need to calm down, but how can you make all of us kind of calm down and say, okay, this is a good place to start?
Yeah, I think tax in itself is really scary, right? It's scary for a lot of people because, like you said, just to understand, what do I do? How do I track receipts? What can I actually write off? And it's really important to know that when we talk about tax saving, we're not saying that you, Ryan, as an example, you don't have to become a CPA. You don't have to understand the tax law, how to write things off, how to calculate deductions. You don't need any of that. How does an S-Corp work? You don't even need to know that, right? All you need is to have a good tax advisor on your team.
Right.
And their job is to help guide you through those different things. When we work with clients, one of our key things is simplification. I don't ever tell my clients anything unless there's like an action involved in it. Like, you know, we don't talk about like the why and all the stuff. So as a business owner, the kind of the baseline where you start is understanding what you can write off, right? I think that's just I hear about write-offs, but what can I do is actually legitimate. And when we say write-offs, and you obviously, you know, if you're in the media business, you know that you can write off like your equipment and you know, decorations and all that good stuff, right? Different lenses. But I think what most people miss out on is some of these things that are maybe partially personal in nature, but also used for my business, like my cell phone. If I'm working from my home office, I built a studio in my home office. Like, can I write that off? Not sure. And so those are things, you know, or I'm driving around using my car for business, but I also use it to pick up my kids, right? And so those are the things we see missed most often. And simply because, you know, the business owner doesn't understand they can write it off, so they assume they can't, whether it's because they don't have a business entity or they just don't know. And so I think it's really important to just take the time to sit down with your CPA or your tax advisor and just say, hey, you know, here are, you know, what are some of the things that I could be writing off that maybe you're not seeing on my tax return, right? Another way is to say, well, what are all the things sharing? Like, here are all the things I'm spending a lot of money on. Are there ways to potentially have them become tax deductible? You know, I'm going to Florida. I might do a shoot. I might meet with a client there, but I might also take kids to Disney World. What can I do in advance to make sure that this is a legitimate write-off? And it's in those simple conversations. You as a business owner, all you have to do is have that open dialogue, because then if you have a good CPA, they will just pick up the other side of the conversation as their job and help guide you through, like, what can you do proactively to take that deduction?
Yeah. I love that. Whenever the topic of write-offs comes up, I just think about that scene from Schitt's Creek.
Schitt's Creek.
I'm sure you know. Yeah. Like, you know this part where he's like, it's a write-off. And his dad's like, what do you mean it's a write-off? And it's fine. It's a write-off. Like, just like.
Who pays for it? No one.
Yeah. The government. I mean, it's just like,
And I
So
really
good.
love that. I love that snippet. I mean, besides that, it's hilarious, but it's really funny because I think on the reverse side, I also
Mm,
come across business owners who will say, like, I'm just going to spend money on this because it's a write off. And, that's such a silly thing, right? I mean, we don't
yeah.
spend money for the write off. The best thing to do is to take a look at what we are already spending money on, anyways,
Yeah.
and say, how can I make sure this is a legitimate way?
Yeah. So you brought up a good one. And I just want to, I'm curious if you can speak into this a little bit more, but a lot of us have an opportunity, and I'll just say, I'll use my family as an example. We've done the Disney thing multiple times. We were camping up north a couple of weeks ago. We live in Michigan. The Upper Peninsula is just amazing, gorgeous, beautiful. And there are all of these like stock photo, stock video websites that you can submit your footage to that people can use, for the videos that they make. Is it, I mean, if I'm going, hey, I'm going to, 7-day trip up north with my family, let's say it costs $5,000. Can I bring my camera up there, film some things, some specific things that I can submit to a stock footage website? I don't know if they're going to sell or not, but I'm doing the practice of submitting the things. How can any of that be written off? Can it be? Tell me more.
I love that. So the word how, right? You just said how. That's such a powerful question. Because like, hey, I'm going camping with my family. Can I write off part of it because I'm a photographer, videographer? Well, generally the answer is no. I mean, if you're going camping, you happen to
Yeah.
snip a couple pictures, submit somewhere. Don't know if it'll be sold or not.
Right.
Business part is kind of secondary, right? I was there. I happened to do some work. But if we reframe it as, well, how can I do it? To make it like almost feel proof that this is a business deduction, right? What are some of the things we can put in place to make sure we write it off? Well, one example is, what if I hired you? What if Amanda hired you and said, hey, these are the exact type of photos that I really need, right? I need the, tall redwood forest. I need this and that. Then I'm going to pay you for those photos. Then we have a much stronger case, right? Well, I'm going there because I need to take these photos for my client, Amanda. And there's nothing that says my family can't also come along, right, for the journey.
Right.
I might not write off the meal for my kids if they're not part of my shoot and not helping out.
Right.
I mean, if they were, that would even be better, right? They're part of the hands-on on the team. But when you do things like that, like travel, things like that, I think I always look at what can we document before the trip, before that transaction, so that if we were to be questioned, I have a legitimate way to say, oh, well, yeah, I spent $5,000 on that trip because I had these requests from these clients. And that was like the best way for me to get all of those things. So with that you mentioned Disney. So Disney is the same thing. Like, hey, if I had a client or if I had a specific shoot, specific something that I had to capture that I can document. And, while I was there, I happened to go to Disney World, right? Nothing stops me from doing that.
Yeah, that's good. I'm even wondering, because we've done that. I've done that plenty of times where we get hired. Hey, the job's in Cancun. I'm like, oh, I'm definitely bringing my wife on this.
Right.
Everything's paid for. And so that makes sense. I'm not writing off her plane ticket because she's not a part of, the thing or whatever. But reversing that. What's that?
I was like, she could be, right? You need a second, third set of hands.
Yes, right. Yeah, exactly. But let's just say, like in this example, I'm going up north. We've got this camping trip. Is it if part of my, what if part of my business model, I said, hey, every year, I want to submit, 5 hours of B-roll footage and or photographs to the stock footage website, or for our own marketing, I'm capturing me out in nature. And, if you watch my reels, I've always got, shots of me hanging out at Lake Superior. Like how does that, like maybe more specifically, as I'm creating my own marketing material, that, being in Lake Superior doesn't directly, reflect that, hey, I'm a video guy and I'm doing these things. But as I'm creating marketing, my personal brand, I'm trying to get more exposure. So I'm like, this is going to be a great opportunity for me to capture some specific things that I'm going to use for my Instagram reels.
For sure, I feel like in the video business, you just have a lot more flexibility, right? In
Yeah.
terms of what you described to say, yeah, this is what I do, right? I'm capturing footage. I'll use it in my client stuff. I'll use this
Yeah.
for myself. I'll sell this footage. Um, and so it's different from business to business, person to person. Like for me, as an example, probably can't get away with, I might use the footage on Instagram, but there's probably no correlation as to why I have to do it.
Yeah.
But yeah, I think it just comes down to pre-documentation, right? So if you like in my
Yeah.
LLC or my S-Corp annual minutes, maybe I'll put a statement in there like, hey, every
Mm.
year I want to make sure I'm submitting, X number of hours of footage. And that footage I want to make
Yeah.
sure I include, beaches and mountains and whatever.
And
Just
Disney and Maui and yeah. Yeah.
please. Um, I think, when we talk about taxes, every taxpayer has a different risk tolerance level, right? So, it's kind of on the whole spectrum of like, well, I'm just going to write it off because it's not unreasonable for a videographer to have those type of trips. Okay, well, maybe on like
Mm.
more risky side. In the middle ground, like, yeah, I document with my minutes and things like that. That's what I'm doing.
Yeah.
And then the very conservative side is kind of what I described. Like, okay, well, I have a client, I have somebody who's requesting this
Yeah.
specific thing, then IRS be difficult for them to say, no, that's a personal thing, right? Because now you have an outside
Yeah.
party specifically requesting something. So, and again, you kind of, it's like a choose your own adventure game, right? Ryan might have a
Yeah.
higher risk tolerance level than Jimmy or vice versa. So that's the beauty of taxes is a lot of that is open to interpretation, which
Mhm.
really gives you more control, right, over how you want to approach a specific write-off or scenario.
Yeah. So I would like to talk about the S Corp thing a little bit because I think as people are listening to this, they're going to be like, wait, what did Ryan just did? He switched from what to what and then he saved all of this money. Tell me more about that. At what point do you recommend a business like mine, I own a video production company. At what point should I consider hopefully everybody's at least in LLC so that they get sued or anything, it's the business that's getting sued, not their personal. So that's, I think, a no-brainer. But then at what point should somebody consider transitioning from being an LLC to filing for their taxes as an S Corp, in your
Yeah.
opinion?
Yeah. That's a great question. For newer business owners, it's like, okay, at what point should I start filing taxes as an S corporation instead of an LLC to minimize my taxes? And that basically is going to be a cost benefit analysis. So let's say your full time job is in the media business. You don't have another job you're working at.
Yeah.
Then usually we say if your net profit, that meaning after all your write-off and expenses, if your net profit is about $40,000 or more, it could make sense to file your taxes as an S corporation. Now,
Yeah.
alternatively, if you still have a full-time or even part-time W-2 job and kind of videos on the side, then there's a more in-depth calculation because we have to look at holistically how much income
Right.
you're making from different sources to see how much taxes you're actually going to save. The reason that the S Corp is so good for business owners is because when you earn everything in your individual name, you have to pay federal income taxes, state income taxes, depending on where you live. You also have to pay self-employment taxes, and that does pay into like Medicare, Social Security, and all that good stuff.
Mm-hmm.
That's an additional 15% on just the whole net profit. Now, when we start earning our income inside of an S corporation, now we play this game of what we call salary dividend split. So if you're someone who, let's say your net profit is $100,000 in your, in this example, if I operate that in a LLC, my personal name, then I have to pay roughly $15,000, right? Self-employment taxes. But if I put it into an S corporation, well, maybe, if I paid myself only, salary on only half of it, then I might save upwards of $7,000 in taxes because I don't have to pay the whole amount in Social Security taxes. Only part of it goes to Social Security and Medicare. So same amount of income. It's just a difference of how the IRS taxes S corps versus how they tax just regular LLCs. It's actually pretty simple. I think a question we get from business owners is like, oh my gosh, so I need a whole new corporation, new bank account, new everything. But you actually don't need any of that. You just continue to operate in your same LLC. The only
Yep.
thing that changes is how your CPA files your taxes.
Yeah, and I would say the biggest change outside of like us saving so much more money was I went on payroll, and so I was getting like every 2 weeks, just like the rest of my employees were. I was getting paid a salary, which I was very nervous about at the beginning because I was like, what if I don't have enough money in the accounts, next time payroll comes around,
Oh, yeah.
like this is going to be awkward. So you work through that with your CPA and figure out what is the amount that you're probably always going to have. Having a line of credit can help in the future if you are tight on cash. That's a totally different conversation, but that can be helpful when like doing something new. But then when we would have excess, I'm like, well, shoot, if I'm only making, $50,000 a year as my salary, what about we just landed these 3 massive jobs? Well, then you can take, what are they called?
Owner distribution.
Yeah,
Dividend.
distributions.
Yep. Yep.
Right. And so you can kind of figure out like, well, there's, 20,000 extra bucks in the bank and I'm going to distribute that all to myself because I own this business and I do what I want with it.
Yeah. Yeah. I mean, that's another reason, like, there's so much flexibility when it comes to taxes, right? Because I think, yeah, people are concerned, like, well, if the company makes 100,000, I'm only paying myself 30. What if I needed the rest of that 70 to live off of, right? Like, what happens
Right.
to that money? It's like, well, you just take it out as rich distributions. It's your money anyway. And if you do it correctly, you don't have to pay, payroll, self-employment taxes on $70,000 of money that you would otherwise be paying. And yeah, we do have clients who are like, what if I don't have money to pay myself? Again, as a business owner, it's totally flexible, right? You can say, I'm on a $2,000 payroll and then a couple months in, I don't have money to make payroll. So I just stop. I no longer pay myself. I'll still pay my employees, but I can stop and come back later when I do have money to pay. So very flexible. And again, not too much changes with respect to you being a business owner. Same bank account, same everything.
Yeah. What was the thing for you that you realized this is the kind of work that you wanted to do?
Gosh. Well, I started out my career at one of the big 4 public accounting firms. And so, I mean, there I worked with just a lot of mostly real estate investment firms and high net worth individuals. And I don't know, just at the time, I mean, when you work in those large firms, working with very wealthy people, like tax planning is just common. It's just what they do. Clients would call us before they make decisions. And I just thought that was normal. I thought that's kind of what everybody did.
Yeah.
But at some point when I left the firm and started working in smaller firms, then I started meeting everyday business owners, like smaller business owners. And then I realized, wow, regular people don't do that. They don't think about taxes. They don't call. And I know it's kind of became a passion for my husband and I. We're like, I really want to just bring awareness to people, let them understand, like, hey, you don't have to be a millionaire or billionaire to use tax strategies. We use the same, we work under the same tax law that they do. We might just have, 3 fewer zeros of behind our income and savings, but it works the same. And I think a lot of times it's even more powerful. If we have a client who makes $100,000, and if we can save them $20,000 in taxes, that's pretty life changing.
Oh my gosh.
Yeah. Versus if it's like somebody who makes 10 million and you save 2 million, I mean, they're still going to live their life the same way.
Yeah.
Not that much change.
I'm curious, with you and your husband, do you guys have like, please tell me that you don't do your own taxes, but that you have somebody that you lean on for help, or do you do your own taxes?
I guess, I mean,
I won't judge you either way.
We do our own taxes from the perspective like it's done by our team in the firm.
Yeah.
But yeah, so I guess we do because we review all the returns that are done to our firm, for all of our clients.
Yeah.
So we also review and sort of do our own.
Yeah, I just think like, I mean, it's for us for the longest time, we do these beautiful brand films for companies that we work for and these amazing stories. And we were so bad at telling our own story, right? It's the classic cobbler doesn't make shoes for his own kid.
Yes.
And until we finally just said, okay, we're putting this in our project management software. It's the Tell Studios brand film. We're doing it. We're just going to approach ourselves like we do our clients, where we're going to have our kickoff call. We're going to go through our blueprint strategy, and then we're going to start producing the video, filming it, and have a timeline for when V1 is due and the final draft and all the things. We just had to do it. And I think we got caught up with for so long, like, well, we know how to do this. We'll eventually get to it. And it just kept getting kicked down the line, and until we just went through the same process. So that's why I just kind of bring that up out of curiosity, like, running the company, it can be one of those things like, well, we probably should sit down with a strategist to kind of walk us through, because we're only looking at it like this, but to have somebody else from the outside kind of come along and point out some things that maybe we're not even considering.
For sure. I mean, so when we were first starting out, building our firm, we kind of, we were our own bookkeepers. So which just meant bookkeeping not done until all the client stuff was done. So thankfully we have a bookkeeper now that kind of does our own stuff, where, then it kind of automatically gets done. And I think just for business owners too, just the concept of bookkeeping, accounting, record keeping is just something that people hate, especially people in the creative space. Nobody wants to deal with it. But ultimately it's kind of the necessary evil, because if we don't track our expenses, we don't have a good way of writing them off, because we don't know what we spend our money on. And so I think it's a couple of tips I would say is make sure that you have a system that works for you. And it's not about what your CPA likes. A lot of times people ask me, do you like QuickBooks? Do you like Quicken? I'm like, it doesn't matter what I like. It matters what you like, because you're the one that's actually using it. I can love QuickBooks, but if you don't like that software, then you're just gonna not use it. So I think really take some time to identify like what method works for me. If you're a solopreneur, you're still doing your own bookkeeping, it could be as simple as Excel. If you are if you have the budget, that's definitely something really good to outsource or offload from your plate, whether it's somebody local who can do it, or even someone offshore who can at least do the data entry for you. Because I think once we have the systematized and things are being tracked, it really takes a lot of the stress out of tax time. I feel like people don't really hate tax time. They hate bookkeeping that comes at tax time when you have to produce all these numbers.
Yes, 1,000,000%. It's like, spending that 2 weeks like digging through, searching, where is that? What was that thing? I don't know. I don't recognize the name of that company. Who's gonna call and figure this? Oh my gosh, we spent how much doing what? It's the worst. It is the worst.
And if you have bookkeeping, again, whether you do it yourself or you have somebody do it for you, what we typically recommend is doing it on a monthly basis. Because, right now, if I'm closing the books for last month, I still kind of might question, like, who was that vendor? What did I spend it on? But it's much easier for me to recall it now, only 30 days later, than having to think about it, a year later, right? Or sometimes longer than that.
Oh my gosh.
Yeah, so it's small things like that. If you have a system in place, like, hey, once on the last Thursday of every month, I'm going to spend an hour doing it. It really helps. And also just from you were saying like, how much did we spend? Having good books not only helps you save taxes, but it just helps you to be a better business owner too, right? If there's where that's bleeding, some inefficiencies, you find it a month later rather than a year later.
Yes. That reminds me of is I remember there was one summer where I think I hired a new filmmaker, and we were filming weddings primarily at this time. And it would take us, I don't know, weeks to get to edit a particular wedding. So we started the summer in May, wedding season kicked off. And then I think by like middle of June, I'm watching the first take on one of these wedding films, and I'm like, oh my goodness, why are they doing the camera like that? And why is the light right there? And and then I'm like, holy crap, like we just shot like, the last 12 weeks of weddings, and we're finally now we can make corrections and improvements here moving forward, but the last 12 weddings or whatever we shot, they all have the same thing.
Yikes.
So monthly, way better than yearly. I highly recommend that.
I mean, I guess, yeah, I've done that, record content. And then when I'm all done, it's like, oh, there's no audio. Great.
Yeah,
There's a
yeah.
lot of just
I mean,
me talking
I've
with no
done
sound.
that. I still do that today. It's a little embarrassing because you'd think I'd have it, on lockdown, but I don't always. Yeah, big surprise. Would you say that, like, thinking through some of the little things that get annoying, like if we could figure out a better strategy for keeping track of the things, that would just make those monthly calls or those yearly, if they have to be yearly. So are there any softwares that you recommend that it's like, hey, at the very least, keep track of these kinds of receipts, or at the very least, make sure that you have a place for uh, vendor invoices that come your way? What are some of those things that you would say, yeah, this is a good app, or this is a good thing to keep track, to make those conversations, those monthly or yearly conversations, a lot less painful?
Yeah. I mean, it kind of depends on how you record keep is just going to be different, right, from person to person. I mean, a lot of our clients who like software, who don't mind software, will use QuickBooks because that is really, automates very well with like your banking and your credit card, so that a lot of that data is automatically downloaded from the financial institutions. And so all you have to do is go and tell it what it is. Was this marketing? Was this travel? And over time, the system is smart to learn. Like whenever you go
Yeah,
close,
yeah.
it's the supply. So you
Right,
just have to
right.
like confirm it or say that was wrong, right? It just makes them much easier. But we have clients who just don't want to learn anything from that perspective. So they just kind of have an Excel spreadsheet where they kind of do the same thing. It's a little bit
Yeah.
manual. App wise, one of the, price for people in the video media business, travel. You guys have a lot of travel, right? Not just like flights, but also just like driving to all these places. Mile
Yeah.
IQ is a really big one that a lot of our clients, it's on your phone, you toggle on and off when there's business travel. It'll kind of help track all of those things automatically in real time. So really like all of that too. I think that you mentioned like, okay, what do I need for my annual or, quarterly meetings? I think one thing to maybe consider, we do this with all of our clients, is not to have like a specific set meeting, but just be able to identify when is a good time to meet or talk with your tax team, right? So like, if I have to meet with them June, but there's really not much going on in June, then maybe that's not really appropriate. But maybe next month, I just got a big client or a big project that I got signed, and this will double my revenues for this year. Well, I probably want to meet with my tax person like soon because I want to know what should I do. Do I have another company, another entity? Will that pay me taxes, or should I reinvest in more equipment, or how do I structure this payment so that I can save the most amount of taxes, right? So I think just being able to um, know when it's a good time to contact your tax person. Again, it's not like a whole thing where you have to prepare and do all this work. It's just could be as simple as a conversation, right? Hey, Amanda, I just got this great job, and I think my income's gonna double this year. Let's talk, and that's it, right? They'll do the rest. They'll ask you questions and kind of go through strategies, and you'll be well ahead of the game before next April.
Oh, it sounds so dreamy. Getting ahead. Just yeah. It's always yes, yeah. Well, this is all very helpful. I know one of the things that you guys know a lot about is real estate. I'll just say this. We've got friends who are like, oh yeah, actually some of our best friends just bought a place, are closing on a place, and part of it's like, hey, this is partially an investment for, it's a write off. It's all. I don't know how it works. I don't know the things, but I think there's this desire, like, oh man, it would be really smart. It seems like there are things that we could do in that arena, but there's still a lot of ignorance. And then also I'm like, okay, I don't think I have the capital to even, have this conversation. So what thoughts do you have around real estate? Smart, not smart?
Yeah. I mean, I think, the answer will differ for person to person, right? Depending on where you are in your business building journey and your wealth building journey.
Yeah.
But of course, we have clients in the video and media business where it just makes sense to own real estate. Right? So real estate doesn't just
Yeah.
mean like, like a rental property on Main Street. It could also just be owning the studio where you operate out of. So yeah, we just had a client who purchased a studio, like it was like a condo studio. And so they're turning it for their own filming, but they're also renting it out to other people who want to do podcasts. Cause, you spend so much money on your equipment, right? And so for them, it's like, well, when I'm not using the equipment, I want my equipment to be making money. So what better way to do it than just have a studio where other people can come? Real estate just comes with some amazing tax benefits because it's one of those few investment classes that, generate cash flow, right? If you're doing it correctly. But also we get to take write-off and depreciation on the building. And so, we have clients who invest with very little money out of pocket, right? They get SBA loans or just bank financing in general. So you have, not too much money out of your pocket to be able to like use leverage of other people's money and then buy this asset that kind of helps you generate all the cash flow and appreciation. So I don't want to say like it's for everyone, but for the right business owner, it could really help not just for, increased income, but also like save on taxes. You always hear wealthy people have real estate, right? So part of that is saying, okay, how can I use the bank's money to grow my wealth and also get some tax benefits as a result?
Oh man, I'm in such a precarious, I don't know if it's the right word, but we've been in this current studio for 6 years, 7 years. Our lease isn't up for another year and a half. And I'm just like, every time, and we pay, it's a significant amount. It's like a 5,800 square foot building. There's an upstairs. We've got a garage door so we can pull cars in to our white cyc wall. And then the front of the building has, we got conference room and multiple offices and all the things. And everything changed after the pandemic. That was just weird for the studio. And then even today, like, the business is different. We have more remote employees. We travel for, a good majority of the work that we're doing. So the studio just does not get the use that it could. And I'm like, man, even if we move to a smaller studio, it would cost me a lot of money to do that. There's just there's a lot of costs involved. So I'm like, does it make sense just to stay here because of those costs that we would have? But then I just think about, I got my first studio or office space, I think in 2008, something like that. And so I've been leasing for 12, 16 years. And if I added up all the dollars, I just want to just cry. But man, I just saw, there's a guy in our community who posted a video. He built a studio, I think on his like home property. But there's nothing I would love more than to own my own building, to be able to, we've got a couple of people that rent space. We'll have agencies that will rent the studio space for a day. And, but to think that money is like I'm investing in me versus like helping my landlord just continue to grow his own business.
Yeah. For sure.
So yeah, I don't know. Help me process through like what should I do?
Yeah. I mean, it's
fix all my problems. Can you?
Yeah. That's for sure a long conversation, but I think you're on the right track, right? It's looking at the opportunity cost of, well, what has my money been doing? What did I see as a result of it? Versus like, okay, well, if I did invest in a building and maybe it was not fully occupied, right? I mean, I tried to rent it out, whether to people coming to use the studio or just like a full tenant, I'm going to have the space and set it up into my space versus like my regular tenant space. But like, even if I didn't cash flow as well, would there have been some appreciation? Would there have been maybe some better tax savings associated with it? I love that you brought up like, well, you can know someone who built a studio on their home property. We have quite a lot of clients who do that. You build like an accessory dwelling unit, or you build on top of your garage, and that kind of turns into a studio. There's definitely a lot of tax benefits associated with it. And that's not too much additional money, right? At least, I mean, you already own the land. It's part of your home, right? You're just
Right.
kind of making
Right.
the highest and best use out of that, that segment on your home property too. So, so many different ways to think about like, how do we maximize? And part of what we do as an accounting firm, I know we mainly focus on tax savings, but a lot of our conversations with clients is also doing what we call, using lazy assets. So a lot of people will have lazy assets in the form of like equity in their primary home. Like my home has a lot of equity in it. Well, but then that's not doing anything.
Yeah.
It's not
Yeah.
growing. There's
Yeah.
no ROI. There's no cash flow. How do we kind of tap into
Right.
that and have it make money for us? Is that I'm gonna, borrow against my home to then buy or build or, a
Mm.
studio for myself, right? And so there's all these different like fun things you can do just to make sure,
Yeah.
I think it's, for a lot of us, like we're really passionate about what we do. Like when you love your video business, it's not something you want to stop doing. But at the same time, we want to be able to take what we make, keep as much of it as possible, not, instead of losing it to taxes. But then with what we keep, we want to put it to work for us some way or fashion.
Mm. Yeah, that's so good. The wheels are spinning. Yeah. hmm This is good.
I
This
think
is,
for
this is
also
helpful.
something like just for business owners in general, I always talk about the option of retirement account um,
Mm.
because it's so flexible. When we have a business, especially for those who are solopreneurs who don't have other full-time employees, I mean, you
Yeah.
can put away close to $60,000 towards retirement and get a tax deduction for it immediately. But also that money that you just put into retirement that could grow for you tax deferred over, who knows how many years, right? Until you retire.
Yeah. Yeah.
So we're always, when we do tax planning with clients, one question we always look at is, would I rather pay the IRS or would I rather pay that towards my own retirement account? Because when you pay to the IRS, the return on investment is zero, right? It's not coming back. When you pay
Yeah.
towards
Yeah.
your retirement, now you can invest that money, in stocks, real estate, a friend's business,
Yeah. Yeah. That's really good. Oh, Amanda, this is great. So are you guys taking new clients? Like, can we push some people toward you? And if so, how do people follow along, reach out, all the things?
Yeah. Yes. So our firm is definitely taking clients. To get more information, you just go to keystonecpa.com. We actually have a tax risk assessment. So for our listener who's like, oh, that sounded really great. I wonder if I'm kind of overpaying in taxes. You can take a risk assessment and then you'll kind of get a grade on how well you did or didn't do. And if you score low, you can always take that result when you meet with your tax person next time and say, hey, here's a this I think I didn't do well on. That could be like a roadmap to starting that conversation if you've not done planning.
Yeah.
And of course, you can contact us if your CPA doesn't do planning. If you don't love taxes and you can't have like handle that much like numbers and things like that, the best place to find me is also on Instagram as Amanda Han CPA. And I try to put like, snippets, 15, 30-second tax tips every day. So light size.
Oh man. Yeah. That's good. That's like something my puny little brain needs versus a 30-minute deep dive into the thing.
You put that on before you go to bed. It's kind of like help you go to sleep.
Yeah. No, I think it would just stress me out. I don't think I'd be able to go to sleep. Oh, Amanda, this is so fun. I'm so glad that we got the opportunity to hang out. I think you've given us plenty of things to be thinking about. And in my encouragement for you that's listening is that this is like, the sooner you can have a little bit better handle on your money and on taxes, the freer you waste a lot of, and I'm just speaking from experience and also from talking to so many other, video business owners. There's just this weight that you carry that you don't need to. And it costs money to have somebody in your corner, like a CPA or a team that wants to get to know your goals and wants to get to know you and your business. But they're there to give insights and to help relieve a lot of that stress. So do yourself a favor. and take some action steps toward getting this stuff figured out. And you don't have to figure it out. What you need to figure out is, who do I want to work with? Who do I want to interview? And maybe interview a couple of different firms to see who aligns with you. But start taking steps, baby steps. That's probably more helpful than not taking any at all. So appreciate you, Amanda. Wishing you guys continued success in the work that you do. And I just want to say thanks for being with us today.
Thanks for having me.
I hope you enjoyed that episode with Amanda. And if you did, please leave a comment. Let me know what your big takeaway was. I think it helps our brains when we reflect and think, okay, what is my big takeaway? What is an action item? What's something I'm going to start doing, stop doing? What is my next step? So try to articulate that, and I would love to hear what that is. So leave a comment in the video, or feel free to send me an email, ryan@studiosherpas.com. That's studiosherpas.com. Okay, yeah. Having too much fun. And like I said, if you're interested in learning more about the 10X Filmmaker community, go to studiosherpas.com/10X Filmmaker. We did it. Another episode under our belts. Thank you for joining me. Reach out if you need anything, and I'll talk to you real soon. See you. Bye.